guys. Thanks for checking out my market report here. This is Mike, and this report focuses primarily on mortgage rates and what drives them on a daily basis. We do touch a little bit on the stock market primarily because they do kind of correlate with one another due to the markets and investment dollars. However, we'll start off right now with the economic report for today. Today we got the ISM manufacturing PMI for the month of February. So January we had a 58.7. Anything on this index indicates 50 and above is expansion. Anything below is contraction. And then forecast is calling for a slight uptick to 58.8. And actually it jumped up 2 points to 60.8, which is actually a two-year high. It matched a two-year high, which is showing that manufacturing is looking pretty good so far at the start of the 21 year. Last but not least, we got the construction spending for the month of January. So January's number, initial one, came in at 1%. However, it was revised slightly higher to 1.1%. Forecast is calling for 0.8%, and it actually went up 1.7%. So we saw a little bit more increase in the month of January and February, which is obviously good news. This week, we'll see stuff in the terms of jobs data. We'll get the ADP coming out Wednesday. Thursday, we get the initial jobless claims, which we get every Thursday. And then last but not least, we'll get the big job number from the Bureau of Labor Statistics, or BLS, with unemployment number on Friday. So let's jump ahead and see what's going on in the headline news. Stocks are up so far this morning. Actually, they're up quite a bit. Nasdaq was up over 300. We had the Dow's up over 600 so far this morning, and a lot of it has to do with yields. Last week was the big news. Yields are kind of spiking. It looks like we have seen some calming in that area where it's not spiking as much right now. We'll touch on that in a little bit, but it seems to have subsided a little bit, which is obviously good news. So let's jump ahead and see what mortgage rates are doing. Mortgage rates are down about 13 basis points. We started the morning up about 17 basis points lower. We even touched down further, like 24 basis points. However, we did go up 18 basis points from when we left off on Friday. So depending on when investors came out with their dollars, some lenders may be pricing in for the worst. So if this was up here when they came out with the pricing, they may have came out with rate sheets that were better priced. However, they may be revising it lower, worsening a little bit today. If they came in about where we started, however, that means lenders will probably kind of holding and see what the market does. But as you can see, we saw some pretty big swings going up 18 basis points and being down 24 basis points. Those are kind of big swings right now. So what does that mean? From the close of Fridays, our pricing is a little bit worse than what we saw on Friday. We did have a nice little rally, which helped us out quite a bit. We regained some of that big loss of what we had on Thursday, which was like 94 basis points. This closed up about 86 basis points. So we're at least able to get some of that back there. Let's jump ahead. Treasury yields is kind of, as we mentioned, tapered down a little bit. See these big spikes we had all the way up to like 1.6157 here, and then pull back. We're close up just right around 1.54 roughly. But right now we're right down about 1.44 range. So we're down, kind of tapping this level right now and kind of testing this floor here. All right. So again, we'll have to wait and see what mortgage rates and yields will do. But again, this is something that we may have seen our plateau, or at least kind of stabilize a little bit and get a little bit of footing, maybe get a little bit of a rebound, get a little bit of a breather before it bounces back up. So at some point, we expect yields to rise some more, but again, it's not going to probably be in a straight line. Long term, it'll go upwards, but we'll see some peaks and valleys going along the way there. All right, so if you guys got any questions about mortgage rates or anything else that's going on, please feel free to reach out anytime. If you guys got questions about mortgages in general, I can help you out with that as well, as I'm a loan officer. I do work with national lenders, so we can help people in different states. So please feel free to reach out and ask any questions. We may help you with that as well. Have a great rest of your day. Thanks so much for watching. See you in tomorrow's video.